Hello guys, welcome back to Ride On Academia. We are still on our series on the partnership account, all right? Now, in our last video, we were able to look at the partnership appropriation account. So in this video, we want to be looking at the partners capital account, all right? We want to be looking at the partners capital account, like how we treat the capital account of partners. Now, in basically, we have two method of treating partnership capital account. We have the fluctuating capital account, and then we have the fixed capital account. All right. So in this particular video, we're going to be looking at the fixed capital account. Okay, the fixed. So under the fixed capital account, we are going to be operating two separate accounts. In one of the account, we're going to be holding our capital fixed, all right? That is, we'll be holding capital fixed in the capital account, and then every other transaction or every other item that will affect capital, such as drawing, such as interest on drawing, such as salary, every other item that can affect equity or capital will be maintained in a separate account. That's why it is called a fixed capital account. Like, we want to hold capital fixed in a separate account. So we'll be holding capital fixed in the capitals account, and then every other thing that can affect capital will be treated in the current account. That means we'll be having two account, all right? Whereas in the fluctuating capital account, we don't hold capital fixed. So everything that can affect capital is treated together in just one account. So in that case, the balance of the capital account keep changing, all right? But in the fixed capital account, the balance of the capital account is held constant. That's why it's called fixed capital account. We try to hold the balance of capital. The capital balance is fixed, all right? Then every other factor that can affect capital will be treated in a separate account known as the current account. So under the fixed capital account, we have two accounts. We have the capital account itself. It's also called the fixed capital account. Nevertheless, we have the capital account, and then secondly, we have the current account. Right? So your capital account just hold only the capital, okay? The money that was introduced into the business as capital is what is contained in the capital account, all right? Whereas every other thing, like I said, every other thing that can affect capital is maintained in a separate account called the current account. This is the format of this is a format of the current account, all right? So every other thing that can affect capital, such as drawings, all right, we have your drawings, the interest on drawings, okay? Maybe when we have prepared our appropriation account, the interest that we have been able to calculate there, interest on drawings, okay, will be debiting. And then for our credit side, we'll be crediting. Let's start with interest on capital, all right? We'll be crediting salary, we'll be crediting interest on loan, and then lastly, we'll be crediting the share of profit, the profit that we shared, okay, using the appropriation account. We'll also be crediting into the current account. So in this case, the capital account is just going to be having a fixed value, right? A fixed balance, and then every other thing that can affect capital, like we have seen here, will be treated in a separate account known as the current account. So we'll be using the same illustration. Then I'll be preparing the capital account and then the current account, all right? So using the same illustration that we did in our previous video, like I said, if you've not watched the previous video on partnership appropriation account, it's good that you do so, right? So that you can be able to understand what we are doing in this particular video, okay? So in using the same illustration, we have that James and John form a partnership on 1st of January 1996, right? The partnership agreement contained the following: the capitals, the partner's fixed capital. For James, we have 30,000, and then for John, we have 24,000. All right. Now, John is to receive a salary of 1,800 every year. The interest on capital is 5% per annum. The interest to be charged on drawings is 2%. And then James and John share profit and loss in the ratio 3:2, respectively. All right, during the year December 31st December 1996, we have that drawings for James is 2,250, and then the drawings for John is 1,750. All right, and then our net profit, like we did in the previous video, was 13,500 naira. All right, so the partner decided to maintain the fixed capital account. All right, we are maintaining here the fixed capital account, so that means we are going to be preparing two separate accounts for capital, right? And then we have done the appropriation account in our previous video. So in this video we are going to be showing the partners capital account and then their current account. Okay, so the first thing we'll do is the capital account, all right, for James and John. All right, so since capital is a credit item, right, this is our fixed capital account, right? Now, because the business started in the year 1996, okay, according to the information that was given, okay, so we are preparing an account for 1996 at the end of 1996 December. Okay, so since the business started this particular year, we are going to be that means the money came in this year. Okay, so it can either be in the cash or in bank. Okay, nevertheless, since information was not given, we can either choose to use, if it was cash, then we'll be debiting our cash account. If it came in the bank, then we'll be debiting our bank account. All right, so either cash or bank. All right, depending on where the money, if it came in as cash or it came in as a transfer to the bank account. Okay, so for James we are having 30,000 naira, and then for John we are having 24,000 naira. This is the money that was introduced into the business as capital for the year. All right, now at the end of the year we always balance our account. Like I said, that's why it is called a fixed capital account. The only thing that is reflecting here is just your capital. All right, the only thing we are holding constant, that means we'll keep holding this amount constant in this account for every year. That's why it's called a fixed capital account. All right, so at the end of the year we are going to be balancing. For 31st December we have our balance carry down the same amount, all right, 30,000, so that we can balance, and then 24,000. We have closed our account, and then for the next year, which is 1st of January 1997, all right, so this is for 1st January 1996, and this is for 31st December 1996. All right, so for 1st of January 1997 we'll be having our balance brought down. Okay, balance brought down from the previous year, okay, which is going to be 30,000, our capital. Okay, same, it must same with your balance carried down is your balance brought down. Okay, and then we have 24,000 naira. All right, so this is it for the fixed capital account. All right, that way it is, our capital is held constant. Now the B part, okay, the second aspect of the fixed capital account is the current account. Because we want to hold capital constant, that means every other thing that needs to affect capital will be treated in a separate account known as the current account. Right, so this is our current account. Now every other thing that can affect capital, all right, will be treated in this separate account. Okay, now when we start it, the first thing that we will be bringing here according to our format, all right, is the drawings. We'll be debiting. This is our debit side and then our credit side. All right, let's indicate that. So we're debiting our drawings, the amount that was borrowed by the partner. All right, so for James, James borrowed 2,250 naira. 2,250 naira, and then John borrowed 1,750 naira. All right, the interest that was charged on drawings. Okay, so this is already calculated in our appropriation account, right? The interest that was charged on drawings for James is 45 naira, and then for John is 35 naira. All right, now on the credit side we're going to be having the interest on capital. Okay, simply put, everything that was deducted in our appropriation account will be credited in our current account. All right, every item that was deducted in appropriation account will be credited here. Okay, so the interest on capital, we will be checking our interest on capital directly from our appropriation account. Okay, all right, so the interest on capital for James, we are having 1,500. All right, And then for John, as calculated in our proportional account, okay, we are having 1,200. All right. Now the next thing is salary. Okay, it's like I said, everything that was deducted here in our proportional account, we will be crediting it in the current account. All right. So we are having salary. Our salary, we are bringing in, the salary was only paid to John, okay, and that salary amount was 1,800 naira. All right. And then lastly, we have, since there's no interest on loan, right? There was no interest on loan. So next we'll be bringing is how much our profit was shared, okay, share of profit, the profit that was shared among the partners. So for James, we have 5,448 naira, and then for John, we have 3,632 naira. So this is every other factor that will be affecting the capital account. So since we want to maintain a separate, like a fixed capital account, it means we'll be treating every other factor that can affect capital in the current account. All right. So we can now balance the current account at the end of our posting. All right. In balancing our account, what we do, we sum up for James the debit side and then compare with the credit side. So for our debit side, we are having 2,295 naira. For our credit side, we'll be having 6,948 naira. All right. So clearly our credit side is higher, right? So our credit side is higher. Now we'll be taking the difference between the credit and the debit. Since our credit side is higher, it means we'll be taking the difference to our debit side, okay, as a balance carry down. All right. So for James, our balance carry down will be subtracting, okay, our credit side will be minusing our debit side. All right. And that will be giving us a balance of 4,653 naira. All right. Like I said, since the credit side is higher than the debit side, we'll be taking our balance to the debit side, all right, to the lesser side, so we can have equal amount on both sides. That is the aim of the balance, okay. And then let's look at for John. We'll be adding the debit side, and then we'll also be adding the credit side, and then we'll do the comparison. All right. So for the debit side for John, we are having 1,785 naira, and then for our credit side, we'll be having 6,632 naira. All right. Also, if you see, the credit side is also higher, right? That means our balance will also be going to the debit side at the end of the year, right? So the difference is what we're going to be taking. So we'll be subtracting 1,785 naira from 6,632 naira. So that will be giving us 4,847 naira. All right. So when we sum this for James, we should be having the same amount on the debit and on the credit side, right? 6,948 naira. All right. On both sides, when we sum up, we'll be having the same amount for James, all right, both on the debit and on the credit side, 6,948 naira. And then for John, when we sum up, after if our balancing is correct, right, we should be having the same amount on both debit and credit side, which is 6,632 naira. All right. So after we have balance for this year, it means our balance will be going to the next year as our balance brought down. All right. So the current account will be having a balance for the next year. What we'll be having as our balance brought down. Okay. So this balance is going to be, we'll be transferring it to the next year's account, right? For James, his account balance is 4,653 naira, and then for John, we'll be having an account balance of 4,847 naira. So in this case, we have prepared, effectively looked at the fixed capital account. All right. Now, in our next video, we're going to be looking at the partners balance sheet account. Okay. Don't forget to like this video, subscribe to this channel, subscribe to all our social media handle if you haven't. All right. Share our video with as many as you can. We'll see you in our next class. Thank you.